there and welcome to the first video of the MCS analysis for the pre-scene by Astranti. So in this first video, I'm first going to outline what the overall package of videos is going to do. And following on from this, we're going to go over the pages that this video is going to cover. So firstly, the first video is going to cover the introduction through to Menta's history. So it will be pages 2 to 5, and then at 6 we're going to do video 2, and this will be our group strategy and organization chart, and this will take us to page 9 where video 3 is going to begin. I'm going to go through the regulatory environment, revenue sources and market opportunity, taking us to competition, which is video 4. And following on from this, we're then going to do up to the financials, and then there'll be a video just for the financials, and then there will be a video for the press coverage section. So with that bureaucratic kind of aspect out of the way, let's get stuck in to the first piece of information we're given about this pre-scene. So you may have heard before that the overall pre-scene is the context for the exam. But what I would like to really emphasize here is how important this tiny little introduction paragraph is. It actually forms the context for the entire document. So we're going to pick up a lot of important little mentions that are going to inform us about what we're going to be trying to think about when we read through. So what I would first encourage before we fully kick off is have a read through this page. Let me know your thoughts in terms of make some notes, and then we will compare afterwards. So if you are keen on getting that sort of in-depth comparison about what you think and what I think, go ahead and give me a pause now, jot down some notes, and I'll see you in a few seconds. Okay, so hopefully you've got some sort of ideas written down. So the first thing we're going to talk about is this first sentence. We have got leading, so immediately we know that they're an important company for the markets they're situated in. But importantly is this multinational aspect. We haven't even got to the company type yet in terms of what sector it's in, and we know it's multinational. So immediately we're thinking about group accounts. You know, it's got many subsidiaries. How do they account for that? And furthermore, are there going to be any exchange rate risks involved? So next up, we have the very next clause even, that it's a public transportation group. Now, if you've seen the industry pack already, you know that will bring up a whole swathe of different aspects regarding the actual industry and how closely tied it is to the government via contracts and the sort of competition aspects that are very different compared to other industries. But before we get to that, because from what I saw from the overall contents page, that they've already got a section on this for you, which then obviously increases our understanding that this is a very important aspect. It means that they're obviously going to be running different services and they have a customer-facing role. This brings about a variety of health and safety aspects that could be present. I mean, whenever you're doing something regarding a passenger, there's a whole lot of different laws and sort of health and safety issues just because of the fact that you are taking them into a vehicle and you are responsible for their well-being. So it's a pretty big aspect. And likewise, you'll see that in the industry pack, there is some mention of how a customer-facing role brings a completely different sort of swathe of risks to staff. So managing these health and safety aspects, and we're going to get to the sort of pestle aspects to being in this industry, but first and foremost, This is super important to have in our minds, and we haven't even got halfway through this sentence. Okay, so with that mentioned, we're going to go on to the next part of what they're telling us, and simply this is going to emphasize their size. 35,000 employees is a very large number, so it's bringing us back to this idea which we've kind of covered already, that they are leading, multinational, and this emphasis on worldwide. So again, this is group accounts, this is a very, very large company, and we have to think about the very specific risks that these pose compared to if we were talking about a far smaller and modest company. So the worldwide aspect brings about these group account issues, as well as sort of information systems. Briefly, you know, we can think about how do the different subsidiaries communicate, how do they report back to HQ, but I'm sure we'll get more on that as we go through. That is typically given to us later on in the pre-scene. Next up, we see that the company offers both local and long-distant bus services. So the implications for this are going to be very specific, but in a broad term, or in broad terms rather, this paragraph is letting us know that they have multiple markets even within like their domestic market. So they've diversified internally and have different services running in each market. So these are almost sub-markets. They're catering to long-distance passengers and they're catering to localized passengers, presumably in cities and maybe even more far-out areas. So again, we have this idea that they're a huge company, they're offering loads of services, and they are fortunately diversified within the services they offer. They're not just simply offering city travel, for example. They have a multitude of different services that they offer. And this is important, as we know, because it reduces the risks if, say, bus travel becomes less popular for long distance, or perhaps less popular in a localized setting. Maybe there's a trend towards bicycles, for example. Sure, that might sound a little bit silly, but you know, we have to think about it as an accountant, and it's super important to think about that risks are mitigated by offering a number of different services. Moving on, we can see that they also operate in developed and developing countries. Now, this is a really interesting point that they've brought up, and to bring it up so early on gives me the feeling that they're warning us about pure NPV analysis. It's very easy to get offered a variety of projects in the unseen material, and say we're asked to talk about which option is best, which will be most profitable. It's very, very easy to just work out what will be the most important for revenues. However, the risk aspects are very, very important. And typically, when we think about developing countries versus developed countries, there's often more risks associated with the developing countries, maybe due to a lack of infrastructure in the first place, maybe looser sort of legal protections. So with this in mind, this is sort of a caveat to don't just take new projects as a pure NPV analysis. Consider what country is going to be sort of utilized in the project. So whilst not the biggest aspect of this paragraph, it's very much an important indicator for what we might expect for the exam. Okay, so that's the first paragraph largely down. It mentions that they're founded in the 80s. This is very typical because in the 80s, if you remember the industry pack, much of Europe and other nations started privatizing sectors or aspects of their public transport away from government ownership. So, moving on, because that's a relatively minor point, and from the contents page it suggests we're going to get a whole lot more about that in just a second. But again, they're stressing worldwide operations. But importantly, they're organized into 3 geographical regions. And this is the Central Eurozone, Western International, and sorry, there's a terrible set of highlighting. Sorry about that. they're organized into 3 geographical regions. And what this brings to mind is that actually the subsidiaries of the overarching parent company Menta are organized in this way. So it's a regional subsidy. If they're handling Central Eurozone services, that's the subsidy, and the same is true perhaps for Western and Eastern International. I mean, I imagine that is the case. So importantly, this is likely our subsidiary breakdown. And this has implications for our idea surrounding potential exchange rate concerns. And we're going to get that more as we move on. As you can see, Menta's head office is in Centralia, which is part of the Central Eurozone, and 70% of revenues are earned there. Now we'll go back to that in just a second, but importantly, the currency in Centralia is C dollars. This is very, very important. It seems like a very innocuous sentence, but this essentially means that Centralia has its own currency, and therefore operations in other countries are going to have different currencies, or at least it's highly likely. And with that in mind, we are very much concerned and wary of the exchange rate risks once again. So, we've had hints of it previously in this paragraph, and now we see it coming to fruition with a very simple but very important sentence at the end here. Now, moving backwards just a tiny bit because we glossed over it, 70% of Menta's revenues are earned in Centralia. So this means they have a high reliance on their domestic market, really high reliance. And this means that perhaps they are going to need to diversify a bit more geographically. Obviously they have done so far, they're a large multinational, but the reliance on one market could be problematic. Say pestle factors once again, if the economy goes terrible in Centralia, what are they going to do? 70% of their revenues will be adversely affected. So they probably want to balance that a bit more with the other countries that they operate within. And finally, with that in mind, we get to the final paragraph of this page. And phew, this has been quite a marathon for such a small page. Don't worry, the first page is very, very important and often gives us this huge amount of information. But now we're into the last paragraph, and the key takeaways here is that obviously you're a financial manager. This is just a reminder of what kind of role you need to be thinking about particularly. So there will probably be a slightly higher emphasis on F2 by comparison to P2 and especially E2. You know, F2 will probably be the bread and butter of many questions, with a large chunk of P2 as always, because P2 is just ever present, and then E2 might be a smaller aspect. That doesn't mean ignore it, please don't take it as that, but E2 will probably be the smaller portion of the 3 different modules, given that we're told very specifically here that we are a financial manager in Menta's head office. So we are domestically based as well. I'm not sure if that will have any real ramifications for how we approach the different questions that we're given, but it's worth noting it might become relevant. Next, we see that your specific role is in the Central Eurozone region, so perhaps you will be given a task to diversify the company away from the domestic market in Centralia and try and, build up revenues in neighbouring countries to balance that reliance on Centralia. But notably, we're talking about often liaising with colleagues in other regions, and this will mean what kind of IT systems are being used, how is communication kept up to date. Very, very important. And finally, the primary responsibilities are associated with management accounting. So I'm pretty sure this sentence comes up every single pre-scene, and essentially this is the examiner reminding you that you're now up to the MCS level. It's going to be vastly different from the OCS exam if you did take that previously. So if you've been through the OCS modules and pre-seen exam there, they're basically saying, hold up just a moment, this is a little bit more advanced. You need to be thinking about the topics that differentiate the MCS from the OCS and making sure you're applying those, otherwise there's not a great deal of difference. So that's just a small sort of examiner kind of warning, I guess, that they always put in at the end. But with that said, this is the page covered. Again, it's very, very much a lot of information thrown at us all at once, but that's typically how these go. I'm sure the next pages are going to be a little bit less prolific on what they can tell us, but let's move on now. So next up we have a rather overwhelmingly large page on bus regulation and state ownership. This is actually largely a repeat of the industry pack information, perhaps in more specificity regarding the pre-scene. So it's going to be very important for us to realize this and really think about it. But largely, many of these sentences are just going to be re-emphasis. I imagine just briefly looking at first glance here, I think we're going to be picking out one or two things per paragraph, so don't worry too much about a repeat of the previous page. This will be a little bit more of a brisk reminder of what the industry pack covered as well. So, public transport raises critical issues for governments. This is probably going to be the most important takeaway from this page. Critical issues, there is a link between economic success for countries and how interlinked different communities are, primarily for things like employment and supply for different companies. And with this in mind, it's showing the highly politicized aspects of the industry. And we're going to see this going forwards, but as the industry pack covered, following deregulation and contracts being offered up to private companies, it's a bidding process. There is a large interaction with government as opposed to other industries, and this brings up a whole different arsenal of issues regarding pestle factors, particularly economic, legal, and definitely sort of the risks associated with maybe fraud even because of this more politicized industry. So, as mentioned, the political nature is pretty high on our sort of list of issues that could come up that are separate from the F2 aspects, which will inevitably come up regarding group accounts and other aspects like that. And here we're just going to see an emphasis on, people rely on the business, and you also want efficient and attractive public transport. So this is largely going to be the metrics by which the company have to strive for. If they're not efficient, then they're going to be largely unsuccessful. And likewise, attractive in this instance likely means financially, like if pricing is completely at odds with the cost of running your own car, why on earth would car owners bother, or potential car owners bother with making the journeys by bus or train? So this is demonstrating what metrics Menta need to base themselves upon to fulfill the needs of the industry's customers. And likewise, it re-emphasizes the government's sort of interests in having car owners make journeys by bus or trains because it reduces congestion and pollution. So this leads us to think about the ethical and environmental concerns that public transport helps with. And this is going to be a recurring theme when we get to those kind of ethical and environmental aspects, because not only do bus services help reduce the overall pollution, but technological advances, as we saw in the industry pack, they can consistently help reduce pollution further by making the services themselves run in a far more green way. So, with that said, we can see the importance of environmental aspects for Menta, and also we can see their critical success factors in regards to efficient and attractive. So, the next paragraph goes into detail about Centralia and other countries using a combination of state ownership and regulation to ensure that public transport was efficient and reliable. So once again, this efficient and reliable aspect are the critical success factors for anyone operating in the industry, and obviously have a very big importance to Menta. And it goes on to say that a lot of large bus operators were owned by government agencies. So again, it's this aspect of some companies may have bought stuff from the government, such as buses, or even sort of infrastructure of the businesses themselves. You know, might have taken over a complete bus company that was operating under the government. And importantly, they said that they aimed to make profits, so it wasn't completely unprofitable for governments beforehand. And also they were able to continue to cover unprofitable routes. So it brings us this idea of, how do Menta fit into this? Obviously they have been quite successful to be a multinational company from the information provided so far, but we have to think about, how do they manage the unprofitable routes? Now, if you remember the industry pack, once again, and I'm sorry for repeating myself so often on this, subsidies are very commonplace in this industry. So with that in mind, you know, we're thinking about, how do Menta tackle this issue of being required almost, maybe not legally, but in terms of the customer demand, and governments kind of fall into this bracket loosely. The demands are that they cover these unprofitable routes because it's super important to everybody's well-being and sort of life plans and scheduling, that kind of thing. So super important here, and it's one of those things that they're going to reiterate a few times this page, I imagine. So the page goes on to suggest how bus services were protected rather, and essentially it meant that bus operators had to seek route licenses for each route they plan to operate. So this benefits the people that are already operating, and essentially reduce competition, making it potentially profitable to operate these routes. So before then, subsidies perhaps weren't around, because by having a hegemony, or monopoly rather, operating these unprofitable routes didn't really matter, because they just had free reign. It was their market. So this is the contextual aspects that we brought up in the industry pack. This is coming from, the industry is quite early on in its nascency, because it's only been since the 80s or so that many markets, or countries rather, have deregulated the public transport market. There's still quite a lot of these huge companies that dominate. It's a very, sentence structure. It lacks a lot of competition compared to other industries. You know, it's one of those industries where, in theory, if a competition authority had a look at it, they would often be quite disappointed. They would be very concerned with it. But the way in which it's structured, the need to bid for contracts, means it's not so easy to have an iron fist on these aspects. But before I ramble on too much on that, let's just keep it in mind that competition has consistently been an issue, and it still kind of prevails now. So as we move down here, we get another history lesson. In the 80s, a global shift away from state ownership and regulation. So we've covered this in the industry pack. It's pretty important in terms of the timing of which a lot of these private companies are founded, and Menta is no different. If you remember, they were founded in the 80s, likely because of this deregulation entirely. There's a lot of opportunity here, and this basically is the genesis point for the entire industry, really, because otherwise it was just a government-owned monopoly. They do mention, however, that there's reduced restrictions, but still heavily regulated. And this is pretty important. This means that new projects are going to be far less straightforward than in other industries, because there's such a large amount of regulations to adhere to. As we kind of alluded to before, the passenger aspect is super important. The health and safety risks, these kinds of things, the maintenance of the buses, but they're going to break down. There's a lot of regulations in the industries, and not least the environmental aspects. It's very important for different emissions to be low, and most governments have some sort of guidelines that are either sort of expected or actually enforced to these companies to ensure that they're getting the sort of CO2 reduction benefits of encouraging different bus companies, or rather passengers, to use bus companies as opposed to their own car or even a share riding service. Because whilst that cuts down CO2, bus services, by carrying so many passengers, are the biggest contributor to this kind of industry in terms of reducing the environmental footprint. And likewise, as I expected, we are getting a mention about government subsidies. So this is to encourage the unpopular routes being utilised by public transportation companies, and this is pretty important just to have those companies bother to do those routes. As mentioned, it's pretty important for each country, for economic success, to keep this interlinked nature together. So these unpopular routes, whilst not profitable, are key to the success of businesses being able to access a greater variety of employees, for example, and other things such as supply transport routes. So with this in mind, it's pretty important for governments, and the subsidies basically make up for the lack of profit. And I imagine we're going to get a whole swathe of numbers for Menta regarding this later on in the pre-scene. I imagine it's going to be one of those big things. So as we mentioned above and before, and in the industry pack rather, subsidies, really important aspect for this industry. So they're giving us an example. A local bus company might receive a grant to operate a regular service between a rural area and the nearest town centre, despite it not being commercially viable. So yeah, they're just literally giving us an example of a basic subsidy. Nothing really to talk about, just gives you a good contextual example. And finally, we get to the end of the page, and it shows us that actually many large state-owned bus companies, apologies for that awful highlighting, let's redo that. The sale of many large state-owned bus companies happened, and it did happen in Centralia as well. So before we perhaps get some more information, at the moment it's looking like perhaps Menta did benefit from this mass fire sale. I imagine that's kind of what happened in real life as well in many countries. This fire sale of different assets and companies regarding public transport when deregulation happened. And they mentioned finally that this released cash for governments for other sort of areas, but importantly left the government dependent on commercial bus operators. Now this ties in to the overarching issue of how the industry is so important to the politics of a country. It's very important not only that civilians get to where they want to be regarding the economy, but also the government have a vested interest on the companies now, because they've given them the reins to a key public service, and public services are critical, as previously mentioned, and this basically means that we're going to have a very different industry when we look at it, and the potential questions they could ask us are going to differ drastically. So in this case, a question might be on whether to bid for a given contract based on the subsidies offered, but also it could likewise be an issue where the government is not happy with the feedback they're receiving from passengers on our service and how we can rectify that, and whether that potential rectification, the solution to the problem, might cost more and therefore the subsidy is not sufficient. There's a whole lot of intricate issues that could come up. So without further ado, let's move on to the final portion of this video. So this again is a very large page. In fact, so far this pre-scene seems far more jam-packed with information than those before it recently. But let's forget that and focus in on what's important to us as the student. So it talks about a guy, Andrew Whiteford, who establishes Menta. And essentially they didn't start as a bus company. He repaired vehicles and, pardon me, horrible highlighting again, repaired goods vehicles and buses in the 50s and did some maintenance, that kind of thing. And then following some growth, it was a family-owned company until the 80s. Now what this brings to me potentially is that in the first page we weren't told that it was a quoted company or on the stock exchange, but in this regard, saying it remained a family-owned company until the 80s makes me think that perhaps they acquired some finance from other sources somewhere in the 80s. Perhaps they'll tell us in just a moment, but this could be via IPO or perhaps just sort of private investment from others. And it mentions as we go on that it was inherited by two family members and they own 50% each, but one of them owns their own company and didn't take an active part in running Menta. But Robert was the general manager of the company. So at this point, we're thinking about governance. The structure of the governance is going to be very, very contradictory to what we might expect in terms of an optimal governance structure. It's going to be sat by a number of family members, and there's not going to be that separation, I imagine, from the board and the management. This is quite typical of small companies as they start growing, but as we'll see in the next section, this will change because of the deregulation. So let's take a look at what the relaxed regulations ended up being for Menta as part of the Centralia market. So bus operators became free to compete with one another. So obviously this is now becoming a privatized market, far more emphasis on it just being a traditional industry, so they can undercut their rivals on fares and essentially they didn't have to jump through as many loopholes hoops even to get sort of justification for running these routes. And it says here that initially it led to chaos, many bus operators entering the market, and this meant that many just ended up making losses without properly planning. The project management was failing for a number of bus companies, and this means that they failed because of this. Now this brings to mind that perhaps much of Menta's assets regarding buses and perhaps depots all centre around this period, because if Menta are still going today, and many competitors that entered the market in the 80s following the onrush of deregulation, if they go bust, they're going to sell their buses, get rid of their drivers, their depots, all their assets basically. So it makes me feel like perhaps Menta's average age of assets or non-current assets are essentially from the 80s, because this is when companies invest and then go bust. And with this in mind, this might mean that Menta are due for some, non-current asset rejuvenation. If their bus fleet is 30 plus years old, perhaps it's a bit of a problem. So it's just a small thing we might be getting from this historical mention. Obviously they were successful despite competition, but importantly their non-current assets may be quite old. The Whiteford brothers that now own Menta, if you recall, thought that deregulation was a good opportunity. Well, so did many other people by the sounds of it. But in terms of these brothers in particular, and perhaps why Menta were very successful, is that Phil had considerable experience of organising trips for tourists in another group and hiring buses and drivers. So this means that one aspect of the business, HR, and sort of the general operations were very comfortably handled by Phil. And then the brother, Robert, he had an extensive knowledge about how to keep the maintenance going, essentially. How operating buses and other vehicles meant that he could understand how to keep the business functioning. So not just scheduling and doing, but maintaining that operation. So perhaps in this regard rather, I should have said that Phil did part of operations, and Robert's looking after the fleet, and he understands how bus companies rather work. So it says here Menta purchased 4 second-hand coaches. So a big outlay, but relatively modest if we think about if the entire market is falling away and there's deregulation and there's an influx of companies. They obviously didn't just jump straight in. They definitely were very calculated and modest with their approach into the industry until things settled, I imagine, where things may have got a lot better for them. They offered a express service between the capital and Marple, a city 400 kilometers to the north. So they started in long distance. So this means their specialism and where they found their initial profits were in these long distance routes. So we can hypothesize that perhaps these are the bread and butter of their business model, and that likely remains till today because of the sort of success they have had thus far. So we know Menta's cash cow. Well, we hypothesize it at least. So let's scroll down and have a look. Oh, sorry. The scrolling is quite finicky at the end of pages. Apologies for that. So again, we get this mention of Phil using his knowledge of the business and his contacts to manage the commercial aspects, and Robert kept the small fleet running. Again, this ties into what we've already said, so I won't digress too much on this aspect, but importantly, we see that Menta grew slowly but steadily despite competition from larger and long-established national carriers, and in the space of about 5 years, their fleet was now 30 buses, and they were doing 6 routes instead of 1. Was it 1? Let's have a quick check. Yes, it was just 1 service, so 6 routes compared to 1, and essentially their fleet grew by over that margin, over 600% from 4 to 30. So growth was really good by the mid-80s. So on this page, we see all about, in 1985, the government itself got rid of its own bus companies. So it didn't even compete anymore. It deregulated in 1980, and by 1985, it basically gave up on trying to be competitive and sold off its companies to private companies and investors. And they also changed the law so that bus operators didn't even need a license anymore for a route. So this is basically taking away the final barrier to market entry, essentially. You just need the core components of a business by this point. So in 1985, you don't need to go for any special planning. You can essentially operate a bus route with far more minimal regulatory aspects to go through before you begin. So naturally, this is going to encourage growth. And as we can see here, Menta saw this as an opportunity and purchased many of the buses previously belonged to those government-owned bus companies. So our inkling was correct. The buses themselves, the non-current assets, are likely going to be from this period. Perhaps they've been changed already, we don't know yet. But Menta capitalized by buying up non-current assets from the sort of sold companies, and this is probably a foundation for their success. Very good at acquiring assets from previously operating companies in the industry, and we may see this as an ongoing strategy. We don't know yet, but in the industry I did kind of find out that Menta were very closely modeled to Stagecoach, and Stagecoach have done this. So let's think about this in terms of we're probably going to expect a strategy of acquisition for growth. So we get told afterwards that they were expanding their long distance routes, and then Menta competed aggressively against other operators in every market. Oh, apologies again. Need to get really better at my highlighting game. But Menta competed aggressively against other operators in every market they operated in, and essentially they undercut. It's pretty important. So their strategy Looks like perhaps they acquire companies once they go out of business, but initially they run them out of business by undercutting them to the floor. This is perhaps not the most ethical method. I mean, it's not illegal by any means, but perhaps an unethical strategy going forwards. So Menta perhaps might get some rap in the press as we move forward. I don't know, but there's always a press coverage section in these pre-scenes, and we might get some gems regarding that. But before I ramble on too much, Menta's pricing was often sufficiently low enough to force many competitors out of business. And then, Menta expand rapidly by acquiring their buses, depots, and drivers. So we've fixed and understood the strategy that are going to be deployed by Menta, and I imagine they're still doing that now. They're going to undercut companies aggressively, then once they're out of business, acquire all their assets, including their drivers. So not just physical assets, but human resources. And this basically is going to be, I imagine, a very, very good strategy for growth. And they are a huge multinational now. So, definitely the case. But, as we mentioned, potentially unethical. And finally, as we get to the latter half of this page, it says that they grow into the early 90s with further acquisitions. So again, acquisitions are really crucial. They may be a critical success factor as far as business strategy goes. And they got more subsidiaries, breaking up newly acquired companies in order to incorporate good parts basically and selling the less profitable elements. So let's take a step back and think about this. So this is a super important bit of information. This means in the unseen exam, we can very much expect not only potential acquisition questions in terms of this is a project, we need this much funding to acquire this company, we would gain this much over X years. That kind of question is quite standard, and I basically recommend it as a potential question nearly every pre-scene, depending on the industry and information. But this one is basically saying divestments are essentially going to be a far more common aspect for the different variants of this exam. So obviously, no one sits the same exam. There's different types of this exam for different places at different times. So we need to have this in mind. This is a really big aspect. Brush up on divestments. Understand what kind of divestments are going to be done. So for example, it could be a sell-off, spin-off, these kinds of things. You need to know your divestment theory and also obviously the calculations as you might expect. So keep that in mind. Divestments are going to be probably a pretty big aspect, and it's pretty important that we understand what a divestment is. It's this sort of aspect of buying a company, stripping it of what you don't want, bundling that up and selling it to a different company, or perhaps even just for the assets, and keeping the bits that are really complementary to your business model. So this is going to be a focus, I imagine, of the unseen exam. So let's keep that in mind. Okay, so here's an example we're given. Menta purchased the Northeast Airport for 50 million Centralia dollars before selling it 2 years later for 80 million. So they incorporated all the bus links between the airport and surrounding towns and the city nearby into its operations before selling the airport itself. So very clever usage of acquisition. It got the airport, monopolized the routes essentially, I imagine, and then sold the actual airport itself with all the travel links intact and likely contracted in as standard. So very savvy business here. And importantly, I want to point out that this is pretty much exactly what happened for Stagecoach. This is Stagecoach's company, and I imagine we'll see more sort of echoes of Stagecoach's practice as we move forward. But I want to emphasize here that if you're desperate, really desperate to be a complete pro on this pre-scene, look at Stagecoach. These are the same company essentially. But just to get back to our actual pre-seen information, this is just a great example of what a divestment essentially is. You know, buying something for potentially underpriced, selling it on maybe for more money or breaking even, but gaining a lot of assets and important business operations from it first and keeping those in the company. So let's get to the final section of this video before I'll see you again in video 2. So Menta also retained a tram service in Northeast Airport. So again, this aspect of keeping the beneficial elements. And then Menta then went on to win a franchise to operate the tram network in the nearby city, transforming it from unpopular and loss-making to a successful service. So again, it's this aspect of acquiring and turning something into an appealing business opportunity, and then Menta sold it. So again, it's this very savvy acquisition when it's cheap and maybe not doing so well, turning it into an efficient business. And if they don't feel it fits, as in this case, they concentrated on business, or on bus services rather, and they just get rid of it to not distract from the key competencies of the business at hand. And then they make a profit, of course. So in this aspect, they mentioned that Menta has acquired a number of business assets through this approach, as we can imagine, including park and ride systems, and they have continued to expand primarily overseas because they are already dominant in Centralia and neighbouring countries. Oh, pardon me. So what I wanted to bring up here is actually that the example we can't take too much away from. This is repeating what I've already said above and annotated on that for you. But in terms of this last paragraph, they've acquired a lot of assets this way. So again, their non-current assets may be quite old, maybe in need of some renovations or improvements. But importantly, it means that their non-current assets are going to be broad. They're going to have a lot of non-current assets. And this means that we might get a sort of sell-off question. Do we get rid of these assets that we don't necessarily need for our core competencies? Is it distracting from the business? So again, it's emphasizing this strategic nature of Menta, and this naturally means we need to think about those kinds of questions, because we're not going to get asked questions that are completely at odds with the business strategy. And finally, they're expanding overseas because they're already dominant. So again, this brings us to group accounts, exchange rates. I just wanted to take a few minutes of your time to first extend my hope that you enjoyed the free sample that you've just viewed, but also to just sort of explain what else Strategy do to help you pass your exam really effectively, provided you found our sample particularly interesting and insightful, of course. So, of course, we have a study text for every module, ranging from P1 to F3, and the certificate level is also free on our website. So we have study texts throughout the CIMA course, every module you could hope to study. The certificate level are free, as I mentioned, and then the rest of them, ranging from P1 to F3, are all available to purchase. Alongside this, if you're not so much a study text kind of student and you prefer a visual way of learning, we have the course videos. We essentially break down the study text into bite-sized presentations with a walkthrough, and it's a very, very, very engaging way of explaining the course. Following this, we have the pre-scene analysis, where we break down each pre-scene sitting into a number of videos, going through the whole document, but also adding a top 10 recommendations for what will come up in the exam, and also a strategic analysis where we put all the models you'd find in E2, for example, to the pre-scene itself, whichever that may be at the time. Alongside this, we provide an industry analysis. This is a document and accompanying video which help you give that contextual information in your exam. So for example, if the pre-scene's on the oil industry, the industry analysis will break down the oil industry, the current topics, trends, issues, what the competitive market looks like, all those kind of aspects, all condensed into one so you can spend your time wisely in your study period. Following on from this, when you actually want to practice all this knowledge, we have mock exams for all of our materials. So StudyText has a generic mock exam based on the module, whereas the pre-scene analysis has mocks available to purchase that are based on that specific pre-scene, that are targeted to the key issues we believe will come up. And if you're not content with just doing those mock exams and practicing that way, we have a marking and feedback system where you can purchase the ability to send in your paper, have it marked by a CIMA qualified accountant, and get personalized feedback on whether you can improve X or Y area. And sort of finally, if you will, if you're feeling really underprepared and that exam is coming really, really soon, the master classes are offered by Astranti, and they're essentially a crash course in anything you could want for that topic. So if it's a master class on the pre-scene, it's going to give you absolutely everything that you could possibly need to know about the pre-scene in one really condensed sitting. Likewise, if it was the F3 masterclass, you would have all of F3 gone through in a very crash course style presentation and video link. You can also purchase it post-stream as opposed to viewing it live, all these kind of aspects. We are very, very confident that these materials will help you get the exam success that you want. So we have a pass guarantee. Provided you fill out a form which demonstrates that you have utilized our materials to a large extent and actually taken the time to study them, and you have unfortunately failed, we will offer you the same materials again for the next sitting as a consolidatory offer to ensure that you can get back on the horse and get that exam grade that you want. With that said, thank you very much for watching the sample video. I hope you enjoyed it and it gives you a lot of confidence in Astranti and your CIMA future.